Now, the question then comes is, what is preparing, which is slightly different, but all sort of trying to focus in on this issue of preparer. And when you're preparing a return, some of the things that you should be doing is that you should be making what are called factual inquiries. I prepared the return. I was asking you some questions about that specific item, that specific document, that specific transaction. I have to come to a conclusion that what I'm looking at is reasonable in light of the facts and circumstances that I see. And I'm going to give you some examples. That I'm taking what's called a position. And taking a position really has two major components that you will see within the language of some of the questions. One of those two positions is called more likely than not. And that's a threshold that is greater than 50%. So that as a tax preparer, as preparing somebody's tax return, and I'm looking at some documentation, if someone says, hey, I want to exclude this from income, I want to deduct this, I believe as a practitioner in looking at the authority out there that I am more likely than not to sustain this if the IRS audits it, as opposed to I am not going to sustain it in terms of an audit. There's also another threshold, which is substantial authority, that says I have a 1 in 3 chance of succeeding. Now, these two thresholds are important in terms of some of our disclosure issues that need to be talked about. I'll get to that later on. We've also identified what's referred to as a frivolous position, and that is that regardless of the amount of disclosure, we cannot file a tax return that takes a frivolous position and not be subject to the preparer penalties. So that if I file a tax return on behalf of a client who doesn't believe that, say for example, that income is considered to be income and therefore is a tax protester, then I am taking a position that is frivolous and I can be assessed the penalties. Okay. And also one of the issues that we have is talks about when you have a position and you're uncertain as to the outcome and you feel that it may not be sustained on the merits, that this may be something that is required to be disclosed on the return. So the tax preparer, in saying, look, I understand what you're saying, I don't think you have a more likely than not level of sustaining this, therefore, in order to avoid any penalties, but my recommendation is that we disclose this position on the return so the service knows what's there. That way, they may disallow it, but if they disallow it and we don't disclose it, we're going to be subject to additional penalties as well. That's a real hard call to make on a general basis. The tax information that we have seen in terms of literature and ideas talk about that disclosure a lot. And I want to read through to you some of the requirements relating to those disclosures. Okay. When we talk about taking a position, I'm going to just go through each one of these, and the language gets a little bit iffy, but I think if one of them resonates with you, that's going to be real good. The position is disclosed in accordance with these regulations. We'll be getting to how these are structured a little bit later. But the code section is 6662, and that code section with the one preceding that code section means that it's a regulation. So that position is in accordance with Regulation 1.662-4F, which permits disclosure of a properly completed and filed Form 8275 disclosure statement, okay, as appropriate on the return in accordance with it. So you're trying to look at when the tax preparer meets the requirements of not being penalized. 2, if the position would not meet the standard for the taxpayer to avoid a penalty under 662D, subsection D, paragraph 2, subparagraph B, without disclosure, the tax return preparer provides the taxpayer with the prepared tax return that includes the disclosure. Okay, so that we're concerned that without the disclosure we're going to be subject to a penalty. The tax return preparer provides the information that includes the preparer. In other words, we gave you the disclosure. If the position would otherwise meet the requirements for non-disclosure, in other words, you don't have to disclose because you meet a certain threshold, the tax return preparer advises the taxpayer of the difference between the penalty standards applicable to this taxpayer under Section 6662 and the penalty standards applicable to the return preparer under 6694. So this basically is our penalty. This is their penalty, and contemporaneously documents in the taxpayer's files that this advice was provided. And then finally, the last part, in section 662 D2B does not apply because the position may be described. The tax return preparer advises the taxpayer of the penalty standards applicable, and the difference between these two and the non-signing prepare return as described in the section will apply instead of this other provision. But that one is probably the hardest to figure out what the heck they were saying. But they came up with some examples, and I sometimes think examples which are great when we look at different notices and different regulations to say, okay, so I read what you read, but I have no idea what you're talking about. Let me go through I'll give 3 examples I'll go through. Accountant B prepares a partnership form 1065, including the K1s, allocating the partner losses amongst its partners in proportion to the original investment. Say everybody gets 25% of the 4 partners. Accountant B is not an employee of the partnership or the general partner. So that means that Accountant B probably is going to be a preparer of sorts because he's preparing the return. Accountant B knows that the loss deduction calculated by Accountant B and claimed by one of the partners on that partner's return, if disallowed, is the most significant portion of the liability of that partner's return. In other words, he knows that the information that he's putting on the K1 when it goes to an individual's return is going to probably be the biggest thing. It's going to be a substantial portion of the return. Accountant B has prepared a substantial portion of that partner's, and I'll put it in there, individual return, and is considered to be an income tax preparer under 6694. So in this case, even though Accountant B did not actually prepare Partner B's individual return, because he knows it's going to be a substantial portion of that return, of that individual's return, he's considered to be a preparer for purposes of applying the penalties of 6694. Okay, so they're using that as an illustration. So that gives you a grasp of what works. Here's another one. This is example number 6. During an interview conducted by preparer F, and these keep going A, B, C, D, E, F in case you haven't caught on, the taxpayer provided a schedule prepared by another advisor in preparer F's firm for use in preparing the tax return. The schedule did not appear to be incorrect or incomplete. In other words, it looked okay. On the basis of this information, preparer F completed the return. It is later determined that there is an understatement of liability for the tax that resulted from the incorrect information on the schedule. Preparer F is not required to audit, examine, or review the schedule in order to verify independently that the information on the schedule met the standard for requiring a reasonable belief that the position would more likely than not be sustained on its merit. Preparer F is not subject to the preparer penalty under section 6694. So in that situation, the person receives something. As a result of using that document, which appeared to be correct on its surface, there's nothing that seemed to be wrong. They prepared the return. Then upon audit, it basically went back and found out that that K1 was incorrect because someone else had done it. For the purposes of assessing the penalty, the preparer F, in this case, is not considered to be the return preparer and would not be subject to any penalties. But the person who prepared the K1 may be responsible if it was a substantial part of this return here. And again, these are not necessarily what the taxpayer is going to have to pay in penalties. These are penalties on the preparer. Another one, this will be the last one. Let's make it 2 more. Okay. This one I think is interesting. During an interview conducted by preparer H, a taxpayer stated that he made a charitable contribution of real estate in the amount of $50,000 during the tax year, when in fact he had not made this contribution at all. It doesn't say at all, but I just added that. Preparer H did not inquire about the existence of a qualified appraiser or complete the Form 8283, which is actually a requirement, folks, in accordance with the reporting and substantial requirements under Section 170. Preparer H reported the deduction on the tax return for the charitable contribution, which resulted in an understatement of tax liability for the year. Preparer H is subject to a penalty under 6694. Now, in that case, he didn't make the reasonable inquiries, didn't ask for the things that he was supposed to ask for, really didn't do the due diligence, in essence, that was required. So for the purposes of assessing the penalty, there's no question that the preparer is wrong. And I could see the client saying, look, I told you it's worth like $50,000. We just stick it on the return and we're done with it. And it's like, I can't do this. It's like, fine, I'll go somewhere else. It's, all right, I'll do it. But if you get audited, you're going to lose. It's like, I don't really care. That'll be my problem. So yeah, the client loses. It was an understatement of tax. The client gets assessed whatever penalty they get. Now they come back to the preparer, which is you, and they assess you a preparer penalty as well. And then the last one, which I think is a good one. I think it's the hardest one for me as a practitioner to wrestle through because this is relatively new language. But it says a corporate taxpayer hires accountant J to prepare the tax return. So you get somebody outside doing it. J encounters an issue regarding various small asset expenditures. J researches the issue and concludes that there's reasonable basis for a particular treatment on the issue. Okay. Accountant J cannot, however, reach a reasonable belief as whether the position would be more likely than not sustained on the merits because it's impossible to make a precise quantification onto regardless of whether it would be more likely than not. The position is not disclosed on the return. Accountant J signs the return as a return preparer. The IRS later disagrees with this position taken on the return. Accountant J is not subject to the penalties under 6694. And that's because when going through there, they believe that there is reasonable basis for the treatment of the issue on the tax return. And while they would like to have a higher level, he's not going to be subject to the penalties in that regard. There are other ones when they talk about some disclosure issues as well. And that is if you take a position where you don't feel reasonable and you need to then you need to disclose those things to look, I know you want to deduct this. I know that there's some authority out there that allows it, but I really don't think you have a realistic possibility. I don't even think you make it up to that threshold. So if you want to claim it as a deduction, you need to disclose it. Otherwise, we're going to be subject to penalties, and I don't want to do that. So it's putting an onus on the preparer when it comes to things like that. So that's under this notice that came out from the service. So it starts talking about how are these things actually working when it gets to those things. Now, what else do I want to do? Or do I want to just do a question or two? Let's do a couple questions. And then I'm going to come back to talk about some of the requirements that we have. Let's start with questions number 1, 2, and 3. Tax return preparer must complete the paid preparer's area if what? Let's see. The taxpayer prepares his own return? No, you're not the paid preparer. The individual volunteers to complete the return at no cost? No, you're not a paid preparer there. The individual was paid to prepare, assist in preparing or review the return? Yes. An employee prepares a return for his employer by whom he's regularly and continuously employed? No. So the correct answer there is C. Which of the following statements is false regarding the income tax preparers? A, only a person who signs the return as the preparer may be considered the preparer of the return. That's not true. Well, it's largely true. It's that if I meet with someone, I prepare the return, I'm the preparer. If I'm an employee, I'm not the, well, let's see what the other things they have. Unpaid preparers, such as volunteers, are not considered to be preparers for the purposes of the penalties, yeah. An employee who prepares the return of his employer, good. And the preparation of substantial portion of the return for compensation is treated as the preparation of that return, absolutely. So there are ways of drawing people in and keeping people away by basically who they are in terms of who a preparer is. So the false statement is A. And then question number 3, which of the following is an income tax preparer? A neighbor who assists with the preparation of a depreciation schedule. That's not considered to be a preparer.